It's that time of the year where we make our predictions for 2025 in the lead up to Christmas. So let's start with the OCR. It's currently at 4.25. The Reserve Bank's already signalled that they expect to drop at 0.5% in February. I think we'll get a quick succession of rate cuts after that, so that by the middle of next year we'll have an OCR around 3%. That's going to give us mortgage rates sort of around 4.8 to 4.9%. So we're going to see those rates drop below 5%, probably not until about March, April. That's great news for borrowers. It's going to leave more money in your back pocket. So I think from a borrower perspective, things are definitely on the improve, and we should see that gradually flow through into the housing market. It's a different story for business. You know, we've had a pretty nasty recession. Business balance sheets are quite damaged. Consumers are still going to be saving money. You know, we kind of spent every spare dollar we had, so consumers aren't going to be rushing out to buy new cars and whiteware. I think you'll find that they'll tend to just save whatever money they get, you know, as rates fall. So business is going to struggle next year. You're going to get mixed signals. You're going to get some good news, some bad news. We've got a Trump presidency. It's going to be really interesting to see how that plays out. He's talking a lot about tariffs, which is inflationary. So as far as mortgage rates are concerned, I think those short-term rates, which largely are driven off New Zealand factors, will be down around that 4.8, 4.9 level. Longer-term fixed rates might hold up a little bit now in anticipation of some level of global inflation coming through from a Trump presidency. In terms of the housing market, there's going to be ups and downs. So we'll get a little bit of a recovery next year. Economists seem to be hanging on around 5 to 7%, which to me would be quite a big increase. Now, bear in mind, it's not really an increase. It's a partial recovery, because in Auckland and Wellington, house prices are still down about 15% from peak. And if you put inflation over the top of that, they're down sort of 25 to 30%. So it's really just a little bit of a recovery. And that makes sense. It's not going to be uniform. It is going to come in fits and starts. I think the old saying was survive until 2025. I think the new saying is survive 2025. It's going to be a bit of a bumpy year. I guess the good news is it's going to be better than this year, but we're not really going to see lots of green shoots until 2026.